10 best countries to buy property without tax. Property taxes are a significant expenditure for any real estate investor, and they are sometimes the single highest expense a property owner faces. What if you could purchase a piece of real estate and not be required to pay property taxes because there are none? Sounds too good to be true, doesn't it? But there are some countries that do not levy any property taxes. Here are the 10 best countries if you want to buy property without tax. 10. Sri Lanka. Sri Lanka, which is located in Asia directly below India, is a popular tourist destination. The favourable climatic conditions, beautiful beaches and other factors make Sri Lanka one of the finest choices among other nations for investing in real estate. In Sri Lanka, there is no such thing as a property tax. While the rental income produced via the use of properties in Sri Lanka is subject to a 20% tax rate, the revenue earned from other sources is not. The stamp tax for purchasing a home in Sri Lanka is between 3 and 4% of the purchase price. 9. Turks and Caicos. Even though the territory of Turks and Caicos, or TCI, does not have a property tax, a significant sum of money must be paid as stamp duty on a purchased property. TCI is also one of the greatest places in the world to obtain a second citizenship. This British overseas territory is an ideal place to own a property either for investment purposes or as a primary residence. It is well known for its beaches and laid-back way of life. The stamp duty on property purchases in TCI ranges from 0% to 10% of the transaction price. 8. Dominica. Dominica, often known as the Nature Isle of the Caribbean, is one of the most beautiful sites in the Caribbean. It is particularly well known for its natural beauty. It is also being regarded as one of the safest spots in the Caribbean. Here, the rate of tourist-targeted crimes is far less than the rates in other locations in the region. In addition, the people living there are really nice and ready to help. Dominica is one of the most popular destinations for those seeking second citizenship. To date, Dominica has one of the most successful citizenship by investment programs. Dominica does not levy any kind of property tax. Even though there is no particular property tax levied on people, municipal taxes in the metropolitan districts of Roseau and Canefield are levied on a case-by-case basis. Dominica's stamp duty on property purchases is 4% of the purchase price. 7. Georgia. Georgia is well known for its low tax rates and its progressive economic policies. Also considered as one of the most business-friendly countries in the world, it is a popular tourist destination. Though generally speaking, no property tax applies in this country, there are a few exceptions. Anyone earning more than 40,000 lari per year, about $15,000, is subject to a 0.1% property tax. It makes no difference if the individual has a source of income in Georgia. When you put that against what obtains in other climes, the 0.1% tax rate is still relatively low. Additionally, Georgia does not levy stamp duty or transfer taxes on real estate transactions. 6. The Cook Islands. The Cook Islands are another well-known tourist destination in the Oceania region. It is located in the South Pacific. Not only is the Cook Islands exempt from property taxes, but it also does not apply a wealth tax or a capital gains tax. This might be regarded to be a significant benefit for those who wish to invest in real estate in the area. This became conceivable after it came to be identified with the country of New Zealand. However, there are various regulations that may make it difficult for a foreign national to own property in the Cook Islands. Yet, the fact is that the Cook Islands offer some excellent perks in the form of taxation. In the Cook Islands, no stamp duty is applied to the purchase of the real estate. There is an exemption, however, in the case of certain documented transactions. 5. Croatia. Are you considering relocating to Croatia? The gorgeous Adriatic coastline, European links and mild temperature make it a popular destination for expats, retirees and businesses. It does not matter if you are just interested in Croatia's dynamic cities such as Zagreb or the ever-popular Dubrovnik, or if you simply want to see the nation's gorgeous mountain forests and many World Heritage sites. You will need to locate a place to call home while exploring the country. It is possible for foreigners to acquire certain types of real estate property in Croatia, allowing non-EU residents to reside in the country for up to 9 months out of the year. However, depending on where you are from, there are restrictions as well as additional regulations to be aware of. Although it is not fully tax-free to purchase property in Croatia, the tax burden is manageably modest. 4. Qatar. Doha, the capital city and port city of Qatar, is an attractive location due to a mix of year-round sunlight, delicious food, kilometers of beaches, excellent living standards, and tax-free salaries. And that is the situation in most other parts of the country. In addition, if you want to remain in the area for some years, it may be worthwhile to purchase or rent a home there. Doha is not the booming metropolis it used to be, thus it is a buyer's market right now. House prices, which were skyrocketing during the mid-decade high, went down by 10% in the 6 months following June 2017. Rents have subsequently declined by a fifth as a result of this during the same period. Furthermore, with new property coming into the market in 2020, prices may decrease even lower. The best aspect is that purchasing property in Qatar is completely tax-free, and there are several other advantages. 3. Liechtenstein. Residents are subject to taxation on their home earned in Liechtenstein. The principle of family taxation governs the assessment and taxation of assets and income in Liechtenstein. This implies that married couples are assessed and taxed jointly under the law. The income of minor children who reside with their parents is also included in the family's total income calculation. Gains or profits earned through the sale of Liechtenstein real estate are subject to a specific tax known as the real estate gains tax, which is 5%. When computing taxable gains or profits, subtracting the investment expenditures, including acquisition costs and improvement costs from the sales proceeds, makes it almost tax-free to own a property here. 2. Monaco. Taking a brief initial look at the European nations, you may at first not expect to see anything significantly attractive about Monaco, one of the tiniest and most attractive countries in Europe. Monaco is another constitutional monarchy located in a tiny enclave in the French Riviera. It has become significantly more appealing for individuals to own a residential property in this area as a result of the zero property tax imposed. If a person desires to rent out his property situated in Monaco, he may do so with relative ease, thanks to a 1% tax rate which is paid by the tenant. Consequently, Monaco is one of the finest countries in the world to own a home since there is no property tax. The stamp duty on property acquisition in Monaco typically ranges from 4.5% to 7.5%, depending on the conditions of the transaction. 1. Malta. Malta, a Mediterranean island situated between Sicily and North Africa, is one of the most popular tourist destinations in the world. Additionally, it is famous for its temperature, seashore, and favourable business climate. It is also popular for those looking to migrate to a new location, especially expat entrepreneurs. Malta has taken a number of significant steps to improve economic and financial stability. Malta's government has developed the Malta Global Resident Programme, which is the country's most significant and intriguing programme to accomplish this aim. Anyone may apply for permanent residency in Malta and Schengen visa travel within the EU under this programme. Additionally, Malta does not impose any form of property tax. All purchases are subject to stamp duty, which takes the place of property tax. Malta is an excellent choice for those seeking both EU residence and tax-free real estate. Malta's stamp duty on property transfers is 5% of the transaction value. There are just a few nations in the world without property tax at all. For example, several jurisdictions have simply enabled property owners to pay a one-time payment in the form of a stamp tax or similar levy, thereby eliminating the need for perpetual taxation. If I had to choose between two evils, I would rather pay a one-time price and be able to control my spending in the future. Thank you for watching this video. Please don't forget to subscribe, comment, and turn on the notification bell. This is Learning Canteen.